Hi, I'm Andrew Crockett, CPA, running for Santa Clara County Assessor in the June 7th, 2022 election.
And my name is Jake Tonkel. I'm a local public banking activist, former candidate for San Jose City Council, and a big fan of Andrew Crockett for Assessor. What we're going to talk about today is public banking.
What are some of the ways that you see public banking fills in gaps that are currently being ignored by the for-profit banking industry?
Public banking would allow our community to focus on new avenues of home ownership, particularly for our low-income community members, where they're faced with high interest rates or even just not being approved for a loan that can get them into a home.
The whole idea of public banking is using the leverage of banking in order to serve you, me, and our neighbors, so that we end up, through our working lives, generating wealth so that we can have retirement.
And it's an additional boost to the economy as a whole. As people are able to get into a financially stable situation, they end up spending more money at local businesses, on their children, in the community, and so we all end up better off for it. And that's that social good aspect of a public bank that we don't get from a private for-profit institution.
It's recognizing those structures that are in our economy that prevent upward mobility so that we can redress them. Like in the assessor's office, one of the things that's counterintuitive is that while it generates enormous amounts of data about housing, it keeps that data under lock and key. If you want a basic characteristics file, the current assessor charges $47,195 for that same information, denying nonprofits and local governments having access to that information to help address the housing crisis. It's like I have a lot of Masonic brothers that are millennials like me, and one of the things that prompted me to run for assessor was I found out one of my brothers was living in a 2-car garage and considered himself lucky for the privilege of renting a 2-car garage for himself, his wife, and 2 kids. And that does not impart a sense of belonging, that this is your home, you belong here. You know that one of the big indicators of somebody having a prosperous adulthood is having a stable childhood. And homeownership, whether it's a condo or a residence of other varieties, it imparts that stability that allows them to achieve prosperity.
First 5 Santa Clara County shows that if you give people stable home life, give youth and kids and children stable home life, you're looking at a 400% return on your investment for what that person is going to do when they graduate from college, how they're going to start a business, that economic prosperity that comes back to the community, and also insulates us from kind of unstable economic cycles. What we saw in 2008 with the financial housing crisis was that banks were trying to get more and more money out of riskier and riskier lending situations, and they ended up in a spot where they would push people to high-risk loans for homes they couldn't afford, so that they knew when they foreclosed, the bank gets that home back, right? Not only do they get all the money you had already paid for your house, but they get the house itself. And when we have a public bank that's focused on creating housing for people, if someone does foreclose or go bankrupt and we need to foreclose on them, that home comes back to the city of San Jose. It's not something to be sold for profit. When someone gets a loan from a public bank, hopefully in Santa Clara County, the interest that they pay on that loan is going to go towards loaning money to someone else who needs a home. And that cycle builds community for us.
Creating a perpetuating financial system that's stable, built to last, and designed for all of our benefits, not just the benefits of those who qualify. Things that a public bank could do is take a look at somebody who may be renting a residence currently for $3,500 a month, and they can run the numbers and say, okay, they want to purchase a condo and it would cost this amount in mortgage a month, this amount in property tax a month, and this amount in insurance a month. You crunch those numbers, and if it's under $3,500 a month, why not loan them the money? They're financially capable of it, and it's all about managing those cash flows So instead of needing to be dependent on trying to get out of the rental trap by saving $100,000, suddenly you can segue directly from having no equity every month to building equity every month. And that benefits our entire community.